Welcome to a new short update. When it gets towards the market, we're going to talk about the Bitcoin correction which is currently taking place. We're going to look at economic data which you should be understanding as well, and that gave the result of the current price action of Bitcoin but also the indices. So what are we going to look at first? We're going to look at the economic data first. I have been saying to you that the 21.6k sweep is definitely an area that you could be looking at for shorts, despite that the entire bullish euphoria started to accelerate quite fast and people were jumping into the markets because they were expecting to go to 28k. First slight correction taking place. We might continue that correction, but therefore we need the Nasdaq and other indices to correct even more. Before we continue, make sure to follow my premium membership and my portfolio. Within there, we are announcing copy trading within a week. We are also going to have multiple traders having their portfolio on there. And next to that, we have a free trade letter, which you can find in the description beneath, which is completely free. And make sure to hit the like button and subscribe to this YouTube channel. Now, when we look at the data, the important data which we want to look at is the PPI and retail sales today. PPI came in way more positive than expected. So you would assume that markets were going to trend up based on the fact that PPI comes in more positive than assumed, in which that the inflation is dropping down faster than expected. So PPI month to month is a minus 0.5%. PPI year on year came in at 6.2, while the expectation was 6.8, so it dropped by 1.1%. The core PPI came in at 0.1%, while the expectation for the year on year was 5.7, and we came in at 5.5, which is a positive reaction as well, as we are seeing that the inflation starts to drop quite fast, and due to that the Fed might adjust the policy. But we also have the economic, which they have been damaging, and that is a show off with the retail sales, which we can see here. Retail sales month to month dropped minus 1.1%. Core retail sales also minus 1.1%, while the expectation was minus 0.4 and minus 0.8, which is essentially showing that customers and consumers are not spending as much as they can anymore. So the economy is going to contract even more and the recession is going to take place here. PPI is a good signal for the markets, as the drops of the inflation is the core ingredient for the Fed to start adjusting the policy. But probably they have been overhiking too much and therefore damaged the economy even more, which we see reflected in the data from retail sales. And based on the data from retail sales and also from the data from industrial production and manufacturing production, which is contracting quite heavily too, we can see that the economy starts to shift off and starts to become weaker. So in order to actually get the economy on the right path again, they need to adjust the policy quite fast. So we get into a stage where lower inflation is good, but it might not be having the impact as you wish, because worse economic data gives bad numbers to the markets, and we still are facing a big recession to come. So in order to prevent that, the Fed has to pivot even more, but bad data is bad for markets, and I think the realization of the recession is getting there. Now, when we're looking at the markets, we can definitely tell that the markets are having this correction taking place, in which we are having the sweep of the high resulting into the correction of the markets, right? So we are seeing a case where Bitcoin has been going towards the high at 21.6, but couldn't really break through it and started to fall off a cliff. The question is, what is actually happening here is that the Nasdaq, which we can have here, the Nasdaq closed a crucial level at 11.7k points. The 11.7k points is important because we've got the gap here and we got into resistance. So you can see the price being reflected, which shows that the markets have been running up due to the PPI coming in lower as expected, but starts to fall off a cliff because the realization of the recession starts to kick in. And most likely this correction will continue to go in the coming days, potentially towards 11.2, but perhaps even lower than that if the economic data remains to be bad. When we're looking at the US dollar currency index, we can see that the dollar has been getting into a support area, and based on that fact we start to bounce up. So we could be getting into a stage where the dollar is actually, as a matter of fact, trending upwards again instead of continuing the fall. And when we know that the dollar is continuing the actual or bouncing, and the Nasdaq shows a correction, and also the yields are getting into a stage where the yields are most likely going to have a reversal taking place. This trend is still good, but at least the dollar is showing strength. The Nasdaq is showing weakness because of the fact that retail sales are doing this bad, and because of the recession fears that everyone has. Most likely Bitcoin will continue to fall as well. Now when we're looking at the lower time frames for Bitcoin, we can clearly see that we've got this rising wedge structure. We have been breaking towards the high again, sweeping the high on multiple exchanges as well, and we started to fall down. So in this case the rising wedge is clear, the bearish reaction as well. We are taking liquidity here, and most likely the trend will continue to fall because we have the CME futures gap at 19.8 to 19.5, which optimally means that the correction will continue to last, and the question is how deep we can go. You should realize that 2019 is a different market environment and a different stage in which we were in. Right now we are into a significant recession, which means that we will not be copy pasting price action that much. You should be taking profits. You should be realizing that taking profits is not a crime. It is locking you into a position that you like. And you are having capital again to trade with. So right now, drop of the Bitcoin price action from 21.6 to 20.8. Probably a slight bounce could be happening towards like 21.1 to 21.2 before we start taking this liquidity and get towards 19.5 to 19.8, which is in theory the area that I want to get into for potential longs. So crucial resistance, and currently, as a matter of fact, we are also starting to act beneath the 200 EMA again. So probably if we do close beneath the 200 EMA on the daily price or the daily level, we are continuing the correction even more. And if we are going to look at the total market cap at this point, we are rejecting there as well. So conclusion is Bitcoin is rejecting. Bad economic data is bad for the markets because of the contraction and the impact of the policy of the Fed. Most likely we will continue this correction of Bitcoin a bit further given the rising wedge structure, but it needs to take some more lows towards 19.5 optimally. Crucial resistance is there at 21.1 to 21.2. Nasdaq has to continue falling if it wants to do that, and if we want to get that correction taking place, not the Nifty but the Nasdaq, and the dollar needs to continue showing strength. That's the update for today. Make sure to hit the like button, subscribe to this YouTube channel. I hope I'll be back soon with a proper camera and not a lagging laptop. Make sure to be there, make sure to subscribe. Ciao.